guys, what's going on? Since 99.9% of the guys that watch this channel, okay, are guys, okay, I figured I'd give you an easy illustration for you to make sense out of this market right now. So focus on boob number one. 33.93 represents the all-time highs the market were hitting in January 2020 while all the analysts were screaming, oh yeah, we're going much higher, okay? Boob number two. 33.82 represents the level that we suggested shorting yesterday, representing a double top. Now, there's a meaningful difference between boob 1 and boob 2. Basically, this one, as you notice, about 9 points lower than this one right here, representing a lower high in the market conditions right now, pointing to the very first sign of a huge reversal that is coming. Now, in yesterday's video, okay, basically we've pointed out that the mother of all double tops is officially here. In yesterday's video, we've pointed out how the market is going to reverse each time it's going to hit this level of 33.78, 33.82. So basically, we want you to know, officially, we're calling for the mother of all double tops in the history of the United States market. I'm about to show you the biggest divergence that nobody is actually talking about. Check this out. So basically, the quick review in yesterday's August 13, 2020, 13 market moves analysis video, we've pointed out the intraday reversal from bull to bear. Guys, it's these reversal type trend reversal opportunities that make you the most money in the market. Okay, pay close attention, especially if you're a bull and you're not sure how to make money when stocks actually drop. So this would be the bull to bear reversal yesterday. Would have been an equivalent of a market top at 33.82. This is a quick snapshot of basically a 2-minute, 2-day chart. This is clearly a double top on a 2-day, 2-minute chart that we called for yesterday. 33.82, that was the day before. The market hits pretty much identical level within the point and begins the reversal. Overall, things look rather bullish yesterday. You know, VIX is just not doing a whole lot. Everybody keeps buying some stocks here and there, but on very, very low volume. Enough for the market to basically grind a few points higher before this reversal hits right at 1 p.m. all the way to 3 p.m. Now, notice the magnitude of the drop definitely exceeds, okay, the positive upside momentum throughout the day. And this has been the behavior that we have been observing in the market. So officially, that top was set yesterday now on August 13th, and it is going to continue such behavior. Now, in some further videos over the next 48 hours, I'm going to show you specifically how to target this behavior in order to rip returns of 400, 500, 800%, guys, because some stocks, they have been giving you these opportunities like clockwork. But for now, I want you to focus and fully understand as a trader the biggest market divergence ever that nobody's talking about. So here's what we've got. This is a simple relationship between VIX and the market. In this case, we're utilizing the S&P 500 index when we're talking about the market. I want you to understand is bull markets don't happen when VIX is at 22. If you're brand new, okay, VIX is a measurement of fear, volatility, you know, short-term volatility in the markets. And a lot of institutions are using it as a hedge against their positions. What they're really saying is they're expecting the market to break out higher from here and move substantially higher. Now, the double top that we're referring to right now is this orange point representing the first boob that I was showing you on the first slide. This is the second boob, okay, represented by the purple dot. So think of this as the boobs to really get this inside of your brain, guys. This is a really great analogy. This is going to help you make a ton of money in the next couple of weeks. Now, there is a huge divergence. Notice, in the position of boob number one, VIX is at 12. Okay, notice this is actually in January of 2020. VIX is at 12, which is a typical low reading for the VIX. Okay, we've accurately predicted how VIX was going to break out above 80, which it did. I'm going to show you this on the next chart. But for right now, I want you to focus that when the market moves higher here to a point of 33.93 in January of 2020, look at where RSI is. It's right over here. It's actually shooting above this level of 70. And now we're at the same level, right? Within 9 points is where we got to in the last couple of days. And look where the RSI is. So there's a divergence. If we're to indeed break out substantially higher, then basically RSI would have been higher. RSI is a measurement of multiple components. Definitely one of the biggest components of the RSI is the volume. As you can clearly see, as where price action moves all the way from 2200, by the way, we did nail this button right here and told you to buy calls while everybody's still telling you to buy puts. Right now we're telling you to go hardcore on puts. Why? Well, the buying volume is drying out. Typically in conditions when the buying volume is drying out, it's portrayed in the RSI, as we can clearly see right here. It's a classic example of divergence between the volume and RSI and the price action. So while everybody's mesmerized by the price action right here, don't forget, now VIX is at 22. VIX is at 22 for a damn reason. Now, if VIX was at 12 or maybe 13 or 14, basically if VIX was somewhere in the teens under 15, the market would actually have a chance to break out further right here. At this point, it's this relationship between the VIX that's given us the craziest divergence. To help you illustrate this just a little bit further, let's take a look at the chart of the VIX. So this is the W that everybody keeps screaming about and keeps reiterating on the news. Now remember, these are the same guys that told you right here when the market was here at 33.93 back in January. They're the same people that told you the market was going to go higher. Okay, and then they lost billions of dollars when this happens, right? Now, we were actually telling you to short the hell out of the market based on a 13 market move sequence. Okay, so we nailed this move while all of these hedge fund managers were caught with their pants down. Now, after that, we nailed the bottom. And right now, we're telling you again to short the hell out of these double top. The key characteristics, again, this is a chart of the VIX. VIX was at 12 when the market was at 33.93. Now that the market is pretty much within just points away from reaching this 33.93 level, VIX is at 22. There's no way VIX should be at 22 level if indeed this was a bullish continuation type of formation. But with most of the Wall Street people, this is what they want you to focus on. They want you to focus on what is believed this cup with a handle pattern. By the way, this VIX chart, guys, it is absolutely bottoming. I insert this slide here to point out this VIX is about to go back to the moon. Okay, remember, nobody, when I was posting these videos back in January telling you guys that VIX was going to go to fucking 85, nobody believed it. But within literally just a couple of weeks, VIX was going from this area of 12 all the way to 85. Unprecedented move, okay, but yet 13 markets move formula actually pointed out to that. One thing to focus on this chart, often believe that these formations, okay, of death cross, and trust me, here in 13 market moves, we're expert on these death cross formations. This one is not going to come through, meaning a bearish move in VIX is about to stop out here. There's definitive signs of bottom information right here on the VIX, guys. So expect VIX to actually rocket higher. So this cross right here, this bear cross that everybody expected on the VIX, it's actually not going to come through. And look at which moment this is actually going to happen. So here's a cup with a handle that all the chartists are looking at on Wall Street, and they're saying, hey, we're about to break out to the moon from here. While even though this is what they're saying, the reality and the actions speak exactly the opposite. While this formation is indeed has taken place, they're taking out money out of pretty much every stock. This is why you're actually getting this intraday drops to the magnitude of 20, 30 points and a magnitude of 50, 60 points in certain key stocks that have been propelling this market higher to this double top formation. So to give you an illustration, basically, if we're to take a look at the S&P 500, here's your cup with a handle formation. We're at the level where all the Wall Street, basically, they're telling you that we're about to get this breakout higher, okay, while in reality, we're about to reverse and move lower. These guys were entirely wrong, costing these pension funds hundreds of billions of dollars back in January 2020, and they're about to get shit wrong again. Okay, so the only way to make the money right now, guys, is it's the simplest trade ever, is to short these levels. Now, there's a variety of ways you can do that now. You can simply short the indexes, but there's some indexes that are better to short than some of the other ones. And if you're curious to know what they are, schedule a 20-minute coaching call with a senior trader here, and we'll walk you through these trades. Now, but two is, you know, some stocks, they're definitely going to outperform the indexes on the way lower. So you will actually be able to make a lot more money by finding the best shorting opportunities. That's what we do here at 13 Market Moves. Now, for some of you that are new, you may be wondering, well, why do you get so excited about, you know, stocks dropping or the market crashing, or, you know, why is this even important? So a typical average investor, especially you're brand new, all you want to do basically, you just want to buy shit and wait till it goes higher. Well, just think of this illustration I'm going to give you right now. Okay, somebody that buys a house at $300,000, okay, let's say for investment purposes, they're hoping that the house at some point is going to be worth more, which is $350,000. Now, they make the $50K, they sell it to the next guy that gets in at $350,000 because he thinks that he's going to be able to get $400,000. Now, at some point, this guy resells it for $400K, and another guy buys it in the expectation that it's going to go to $450,000. Now, at that point, this guy that's getting at $450,000, he's like, oh my God, I watched this house on the market from $300,000 to $350,000, and I missed out on it going from $350,000 to $400,000. Now, this guy, damn it, I'd rather buy it right now. So he gets in, and he's like, man, $50K, that's maybe, I mean, look at how fast this thing just keeps going higher and higher and higher, and it just, look, man, maybe this thing is going to go to $1 million. So he doesn't sell it at the $500K. Okay, when what happens, he got in simply because he kept observing that the trend was higher and higher and higher. And that's what most of the Wall Street analysts, I mean, a 5-year-old can look at the chart and tell you if shit is going higher. But that's not how money is made. Okay, money is made by identifying what is actually coming next. And during certain conditions, which we can clearly point out with the 13 Markets Move formula right now, this is the moment where this guy that should be taking the $500K for the house, he always stays his welcome, thinking that the shit is going to go to the moon, like Tesla stock is going to break out and it's going to go to 3,000. Okay, he should be selling the damn thing this morning, but yet he's going to always stay his welcome, and he's going to be getting out when Tesla is going to be trading at 1,000, which is about $650 lower than where it's trading right now. But this illustration, okay, at some point, okay, housing prices that don't go forever to the moon. You've been around 2007, 2008. You know how that rodeo works, okay? So if this is not your first rodeo, you know that we're pretty much, you know what to do, or maybe you missed out on an opportunity what to do. I mean, you cannot short sell a house, meaning you cannot, you know, let's say open a short position in the house and capitalize on this drop. But this is the beautiful thing about the stocks. You can't do that. And because most of the drops, they happen much faster than something, the price action of something moving higher, utilizing short-term options, guys, makes the most sense. So if you don't understand what that really means and how it can literally transform your trading account from whatever it is, okay, to where it could hugely be up 400, 500, 1,000% over the next 3 weeks to 3 months, if you don't know what strategy you should be utilizing in order to take advantage of this, okay, you need to definitely schedule a call. Guys, schedule a call today. Don't wait another day. Next 90 days in the stock markets is going to be absolutely freaking insane. I don't want you to miss out. And if you don't understand how money is made when stocks actually drop, maybe you shorted some stocks in the past, made a little bit of money. But the ultimate best way to move your account higher, no matter where it's at right now, is to utilize options to short stocks. So if you would like to get more understanding, a clear map of how you can profit from current market conditions, schedule a 20-minute trading coaching call with a senior trader here at 13 Market Moves, or at least visit 13marketmoves.com to get more information. So with that said, guys, trade like a rock star, short the double top. The mother of all double tops is here. Congratulations to all the short sellers. That's what we've been waiting for. Let's roll. Let's get this done today.